What's up, guys? Welcome to the Celsius update video. I am in an Airbnb in Joshua Tree. I'll give you a little tour at the end of the video, but I just want to cover a couple of the updates from Celsius. So to start, Daniel Frishberg's motion is filed by the UCC, basically saying, hey, we need to start insider clawbacks and start cutting costs, and this is going through the court, which is very cool. We have the Series B Equity Committee wanting the schedules to be in US dollars and not in crypto. So they are fighting for what is in their best interest. Also, the Series B, this is the equity holders, they are objecting to setting a bar date for the claims, which I'll get to in the video. Next, the UCC is objecting to stablecoin holders as secured creditors. Then Kirkland is objecting also to the same thing, that stablecoin holders should not be secured creditors. Next, the UCC is objecting to the sale of stablecoins unless certain parameters are met, which I'll get to. And the UCC is also supporting the KERP, that is the retention plan to keep employees from not leaving Celsius. And finally, the story that just came in before I began this video is a declaration from Oren Blonstein, who's the head of innovation, and he's talking about custody accounts, withhold accounts, did they have separate accounts, were they commingled, and really going into how all of that accounting and the ledger worked inside of Celsius. So the first story right here, we have Daniel Frishberg's motion to compel the debtors to cut costs and start insider clawbacks. So again, this guy is 18 years old, he hasn't even started law school, and in about 7 days, this is going before the court November 1st, and this was filed by White & Case, the law firm representing the UCC. So very, very cool there. Next, taking a look at the Series B preferred holders. They are directing the debtors, meaning Celsius, to amend their schedules and statements. So what they're saying is that the schedules are improper, misleading, and fail to comply with bankruptcy rules because they count customer claims in crypto rather than the lawful currency, which is the US dollar. So as I was reading this, I was trying to figure out what their game was, and it is pretty complex, and I can't say I have a perfect handle on it, but they are basically trying to say the schedules need to be in dollars and not how much crypto we actually had, and this would benefit them. And that led me to this motion. The Series B holders are also objecting to setting bar dates for submitting proofs of claim. So what they said here is that the bar date motion, and the bar date again, this is when the date is when if you want to submit a claim, basically if you disagree with what Celsius says they owe you, and on your phone it says that you have more crypto than they say, the bar date is the date that you need to submit a claim by. It is the deadline. So they say here that the bar date motion is premature due to the state of the debtor's schedules. Again, going back to this story, saying that it is not in US dollars, but it is in cryptocurrency. So they're making some claim here, basically saying that there is a liability issue, which I'm not going to go over exactly what this means, but they have some very expensive and smart lawyers trying to fight for their best interest, essentially. In addition, it says the debtors have failed to schedule customer claims in US dollar amounts. I already covered that. And again, they say this is required by the bankruptcy rules. So it's a very long motion with objections. And again, at the end of this is them getting what they want, which is basically getting their money out first, and they getting more money than just being lumped in with all of the unsecured creditors. They want their piece of the pie first. So they're making some complicated argument, essentially talking about the proposed procedures would inappropriately and inefficiently leave open the question of whether parties in interest, such as the Series B preferred holders, which they are talking about here in this motion, need to object to potentially hundreds of thousands of customers' POCs, and POC means proof of claims. So basically, if the schedules are not in US dollars, this could create a giant mess and create a lot of havoc, and this would be a very big deal. So again, this is just their lawyers trying to fight for their clients. But what we saw, I believe, yesterday or the day before, I don't know, all my days are literally blending together. We saw that the UCC and Kirkland, and I believe the judge said they do not get their special equity committee. They do not get to be represented using our dollars, using the estate's money. So I think that they are fighting because these people invested, I think, over $1 billion around there, and they are paying lawyers to fight for them. So that's what we're seeing. So the next story, there is an objection from the UCC that considers the USDC investors as secured creditors, all stablecoins, and including Tether Gold. So there is an ad hoc group with lawyers that are saying that basically stablecoins, including Tether Gold, should be secured creditors, or people that hold them should be secured creditors. And they are arguing that no, that is not the case. So essentially, this group of creditors is asserting that collateralized stablecoins should be treated as secured claims against the debtors. And collateralized stablecoins they actually talk about here, they derive their value from an underlying reserve of assets held by the issuer of the coin, like fiat currency, precious metals, treasury bonds, securities, cash equivalents, and crypto. So that would be like USDC. Alternatively, we have algorithmic stablecoins like UST, which had its horrible collapse earlier this year. So the UCC is saying that people who own these stablecoins, they are not secured by any lien on the debtor's assets. Accordingly, they do not have secured claims against the debtors. And here it says the bankruptcy code clearly says that a claim is a secured claim if the creditor, meaning like Celsius, has a lien on property in which the estate has an interest. So long story short, there was nothing special that happened when Celsius was buying or trading and acquiring stablecoins or Tether Gold, and therefore, just because it is backed by assets, like just because USDC is backed by treasuries and Tether Gold is backed by actual physical gold, which you can actually redeem if you wanted to for physical bullion, it does not mean, therefore, that their claims are secured claims and they get ahead of the line before everybody else. And here we have Celsius Network saying the exact same thing. So they are objecting to this motion as well, that stablecoin investors are secured creditors. Here they said that they must establish that their transactions with the debtors were secured by collateral, but they have not met this burden. So again, it doesn't matter that you held assets that were secured by treasuries or real gold. It does not make a difference in this case. That is what they are arguing. And again, their argument here is because stablecoins like USDC and Tether Gold are pegged to and backed by tangible assets like treasuries and physical gold. Therefore, they should be classified as secured creditors. So we have the UCC and we have Celsius, backed by obviously Kirkland, objecting to this. We will see what happens with the law. We will see if Simon can work together with all of these groups. I mean, that's what he's trying to do. He is talking to all the ad hoc groups. We have withhold, custody, loans, stablecoins to see if they can all work together so we don't have to settle all of these disputes in the courtroom, which can take a lot of time. We're going to be paying lawyers a lot of money, and there is a higher likelihood we may go into Chapter 7, which is no good. Next, Celsius Loans says, what incentives do insiders have to stop the gravy train of monthly payments? The highest paid insider is in charge of restructuring. Why would he want to end the restructuring? $108,000 a month. And, you know, this is a fair point. Now, this is September 2022 payments to insiders, and it looks like Alex is still here, but he says he's obviously no longer employed, but I guess he was still getting paid almost $40,000, but that's not the point. The point is right here. Somebody got paid $107,000, and that person is the director, David Barse. So that's a good point. Like, what is the real incentive, right? What is the real incentive for these people to get out of Chapter 11? And that is something that I hope the judge is considering and looking into and noticing that, you know, there is a real incentive to keep this thing going as long as possible. And I don't want to get into like conspiracies about who's working for who and who's representing who and all that kind of crap. But if you just think logically, I mean, these people are making a lot of money just to create a plan, which I believe they will present to the UCC. I don't think that Celsius is never going to present a plan. I think they will, but they're making a boatload of money for doing so. And we know that most, if not all of these people have very little crypto inside of Celsius Network. So before, the argument was like, well, Alex still has all of his money with us, or, all of these people still have their money with Celsius. Therefore, they want to get out of Chapter 11 so they can get their crypto back, right? That was actually my argument because I thought that was the truth. But now we're seeing that they don't have much money on the platform, so they're not trying to get out of Chapter 11 to get their money back out of the platform. They may just want to hang out where they are and make $100,000, $20,000, $30,000, $80,000, whatever. A lot of money a month just to think of a plan. So next, a quick story about the UCC objecting to the sale of stablecoins, which is kind of old news. They talked about that before, but there is something specifically different about this, which I'll get to in just a second. And here the UCC actually says that there is no pressing need to sell stablecoins. The debtors anticipate that they will have ample liquidity exceeding $100 million in baseline liquidity through at least the end of December of this year. So their first cash flow coin report, whatever you want to call it, really showed that they were burning through cash incredibly quickly. So now it says that they will have over $100 million at the end of the year. And here they say it does not appear that the debtors will breach their minimum cash balance of $20 million until at least spring of 2023. So $20 million is the minimum cash balance that they need to apparently have on hand. So basically, what the UCC is saying is that the debtors shall not be authorized to sell stablecoins unless their liquidity essentially breaches that $20 million threshold. And then they can sell some stablecoins to bring up their liquidity up to $25 million. So basically that's the difference. If the liquidity drops that much, then they can sell a little bit of stablecoins to get up to no more than $25 million. But ultimately, guys, we want to get out of Chapter 11. I've been talking to you about this for a while, and however we get out of Chapter 11 is ideal. Whether that is through Simon's plan, whether that is through a plan that, Celsius brings forth, which is better than Simon's plan, whether it's another bidder who provides a better plan, however we get out of Chapter 11, which obviously gives us the most crypto back and ideally the most equity in a new co, so we can take advantage of the assets like GK8 and mining and all of the repayments happening to Celsius, possible insider clawbacks that will come back into our pockets. As long as we can capture those assets, ideally, that would be the best way out of Chapter 11. So this quick story before I get to Oren Blonstein's declaration talking about withhold and custody assets. This basically is saying the UCC is in support of the KERP, that KERP, Key Employment Retention Plan. So this is kind of old news again, but this did come through. They're talking about at least 102 employees have voluntarily resigned since the commencement of these Chapter 11 cases, and the committee, the UCC, recognizes that many of Celsius's remaining employees possess important institutional knowledge regarding the debtor's business. And they're saying if more and more people leave, then they will have to spend more money to either hire new people or get independent contractors that can perform the duties of these people who already know what to do inside of this company. So that's what they're arguing, is that this will actually save money if, right here, they pay approximately $2.9 million, which is an average of $45,000 proposed per person to keep the key people in the company. So here's the last story I wanted to cover, and this is a really long document, 22 pages. I'm just going to cover some of the highlights because this would take a long time to go through. So Oren Blonstein's talking about where assets were held with custody and withhold. So Oren is coming out with this story, I believe, because he wants to clarify exactly where crypto was being held. We had people saying that all the assets, earn and custody, should all be treated equally because they were all being intermingled, right? They were all just going into one slush account. So he does go over that in this declaration. I'll just cover some highlights. He says the wallets used as custody wallets were pre-existing wallets that had remained mostly unused since their creation. Talking about withhold accounts, he says they were used to track crypto transferred to the Celsius platform that were not eligible for any given service and not supported on the platform. So talking about if somebody transferred Binance BNB, those transfers would be reflected in the customer's withhold account. So here he says digital assets in the custody program were maintained in a separate custody wallet, distinct from the Celsius's main aggregator omnibus wallets. So he's clarifying that custody coins were separate from other coins. That's what he's saying here. So here he says the company's internal system, Celsius's system, their ledger accounted for increases and decreases in customers' account balances based on that customer's activity, not the actual movement of coins in Celsius's Fireblocks wallets. As a result, any transfer of digital assets to or from the custody program by a customer would not necessarily be met by an immediate and corresponding transfer of coins between or from custody wallets. So there could be a lot of movements between accounts, but he's saying that that's not going to be reflected, which is interesting because people trying to prove that they were all in one account, he's basically saying, well, you're not going to see individual transfers and movements, so that may be difficult to prove. And here he kind of talks about it more. He says a customer request to transfer a particular digital asset, so basically transfer any crypto, to or from that customer's custody account did not immediately or necessarily result in a movement of coins on the blockchain. So a lot of what was happening was all in their internal ledger. Some people are saying it was an Excel spreadsheet. I don't know, but it was their internal system for accounting for who owns what. He says, in other words, Celsius used its internal ledger system to track customer account balances. It wasn't all done on the blockchain, which I did know. I mean, everything that was done in the wallet was not something that could be tracked in the blockchain. We knew this, right? If you swapped one crypto to another inside of Celsius when the swap feature came about, I would have guessed that that wasn't something that would be on a public blockchain. My guess is that it would have been something in their internal ledger system, which he is saying. So this could be an entire video really going through this, which if you want me to make, I will. But he's talking about commingling with other digital assets, the aggregator wallet, talking about withhold accounts. And again, there's a lot of data here, and this will be picked apart word by word by the ad hoc groups, especially the ones representing withhold and custody, because they're looking for any type of, slip up that Oren did that will help them have a stronger case. He talks about wallets called frictional wallets, which served as an intermediary step between aggregator wallets and customers' external wallets. So essentially, there were all these wallets, and they had to make sure their internal ledger was accounting for how much Bitcoin was in custody, how much Ethereum was in withhold. And that's what I'm gaining from this, is that not everything was on the blockchain. There were different wallets, and there were different accounts, and funds were moving in and out of these different accounts. And at the end of this, he shows how much crypto were in the accounts a couple days before the freeze. And here it is, basically Exhibit A is how much crypto was in custody and withhold 10 days before and after the pause. So if I just scroll down here, you can see Exhibit A. We have June 3rd right here. We have the assets and liabilities for custody, and then the liabilities for withhold, and all the coins. We have now after the freeze, June 15th. Then we have June 17th and June the 20th. So guys, that is it for the video today. Just wanted to give you guys an update on what's going on with Celsius. I hate getting behind, and I want to keep you guys up to date. So now I will give you a little tour of the Airbnb. So this is the kitchen. It's like this very old styled kitchen. And that is a couch. That is a fireplace in the corner. Those are some of my bins that I use for my stuff. There's some art. Here's the bathroom. Spectacular bathroom. One of the best I've ever seen. If I had a Donald Trump voice, I would do it in his voice because that's what I'm trying to impersonate. There's the bedroom. Nothing too special. Have not been in the bed yet. I just got in today. So heading back into the living room. You have some art. I guess this guy's an art collector. And what I want to see here is 1940s porn. And there you have it, guys. A 1940s spank bank porn. That is it for the tour. Take care.